Hi friends, at the time of recording this video, markets are hitting all-time high and Nifty is trying to regain 25,000 level. And if you ask me that, Rahul, where are the good opportunities? Where are the undervalued opportunities right now in the market? My simple answer to you will be it is in the banking sector, right? And let me back up my data with some proofs and data points as well. Have a look at my screen. You will see State Bank of India in the last 1 month is down by close to 7.5%. Have a look at private bank, for example, Axis Bank is down by almost 8.5% in the last 1 month, right? Have a look at ICICI Bank Limited, one of the very quality banking stock is down by almost 5%. While the market is going up, these banking stocks are correcting, right? If you look at the Nifty Bank, that is down by almost 3% in the last 1 month, right? HDFC has hardly moved in the last 1 month. Actually, it has hardly moved in the last 1 to 2 years. That's a different story altogether. But my point here is that the banking stocks are correcting in the last 1 month. What is causing this correction? I'll give you data backed analysis, and also in this video I'll try and analyze two stocks. One is a PSU bank and second one is a private bank. People who do not know me, my name is Rahul Jain. I'm a full-time investor. And with that, let's get this video started. So let's understand the root cause of this correction in banking stock. Have a look at my screen and you will see that FIIs have been selling the financial stocks. And if we just talk about some numbers, between July 16 to 31st, they sold around 8,000 crores of stocks in banking or financial sectors rather. And between August 1st to 15th, they sold even double, which is around 14,000 crores of selling. If you just look at all other sectors, you will very quickly note that except IT. So in IT, they have been buying in the last 2 weeks between 16 to 31st July, and that's why you see the stock prices of IT companies such as TCS and Infosys soaring up like anything. But coming back to financials, they have been selling. And the natural question here may be that, Rahul, why are FIIs selling, right? There may be n number of reasons why FIIs are selling. They are actually the net sellers right now in the Indian market. But when it comes to banking sector, the key reason seems to be that right now what is happening in the Indian banking sector is that the deposit growth of the banks is slowing down and their loan growth rate is looking very, very good. So the problem that the banks are facing is that they do not have enough money to be able to give loan to people, right? That's the problem they are having. And this is the problem RBI Governor Shaktikanta Das also highlighted. So when RBI Governor is speaking about this particular problem, then of course this might send some fears into the investors' mind. And not just the banks, even the NBFCs stocks, you will see many of the good NBFC stocks are right now under the pressure because of this issue that is going on right now. Now you may have further question that, Rahul, why is it happening that the deposit growth is slowing down? Mainly because if you look at this data here, financial savings of households, if people were saving 100 rupees, earlier they were putting 33 rupees, 33% of that money into term deposits or fixed deposits. It has come down to 29 rupees because people are not putting a lot of money in FDs. What are they doing? They're putting the money into SIPs, mutual fund SIPs, and that's where it is gone up from 2% to 6% right now. Will this trend continue? In my view, yes, this trend will continue because retail people like you and me would like to take advantage of this growing stock market. Therefore, we would like to put our money in mutual funds or stocks or derivatives and many other assets, right? So this will continue. So in the short term, there may be definitely a more pressure on banking stocks. But in my view, medium to long term, FIs are going to return to Indian market. So typically FIs sell their stocks, go back, find some other opportunities abroad, and then eventually when those opportunities are exhausted, they might return to Indian market. So I don't think it is going to be a long-term phenomenon. So if you're looking for some mid-term to long-term bets, then right now banking sector in my view is looking very, very good. Okay, Rahul, we have understood this. What about the undervaluation aspect of it? Why do you say that the banks are undervalued right now? So I use very simple ratio of Nifty PE versus the bank Nifty PE. Have a look at my screen and you will see the green line is the Nifty PE ratio and the pink line is the bank Nifty PE ratio. And very quickly you will note that from January onwards, if you see the valuation gap has opened up here. So January 18th, if you look at the data, bank Nifty PE was 15.50 while the Nifty PE was 22.64. So bank Nifty was available at a lower valuation. Right now, if you look at the position, it's even down, further down. If you look at it, it's come down almost to the bottom possible from a PE perspective in the last 1 year, right? So from a valuation perspective, if you compare bank Nifty or Nifty 50, in my view, bank Nifty is looking much more attractive. If I were to invest even in an index, I would rather invest in a bank Nifty right now versus the Nifty 50. Not a recommendation for you, but this is what the data is telling me right now. And this sort of data analysis I share exclusively on my YouTube member community on a daily basis. If you're not yet a member, consider subscribing and becoming a YouTube community member so that you can practically learn from the insights that I post almost on a daily basis. Give it a try for 1 month and see if it helps you or not. With that, now I want to do discussion on the two stocks, one from the private sector bank and second is from the public sector, right? So the first one I'm going to pick up is Axis Bank here, because I have not spoken about Axis Bank on my channel at all. So I thought I'll do some analysis on Axis Bank right now. It's down by almost 8.5% in the last 1 month at the time of recording this video. But you need to look at this in the context of the gain that the company has made in the last 1 year. The bank has made almost 22% gain in the last 1 year. It made a highs of 1317 rupees. Right now it's trading at around 1174 level. Now from 1174 level, can it go back to 1317 level in the near short term or not? We need to really look at the fundamentals of the company. So if I talk about some of the aspects of fundamentals, point number one here, you will see that their deposit growth has been around 14% in the last quarter. If you look at the advance growth has been loans growth has been around 15%, right? So it's a decent growth in the deposits as well as in loans in my view. That's not a problem at all. If you look at the operating profit, that has also gone up by around 16%. Very, very good number to look at. But when it comes to profit after tax, this is where I see some pressure. It is in single digits. It's only gone up by only 4%. So what is dragging the profitability? And if I show you some data on that, you will very quickly note the credit cost. Another important concept that I've been speaking about on my channel as well as on my YouTube member community, that credit cost is what is driving the profitability down here. If you see, the credit cost here is gone up from 0.32% to 0.97%, which is almost 3 times. And that is a massive blow to their profitability in my view. And that is what is causing some pressure in the stock as well. Because in the news also you will read that the Axis Bank fell by almost 7% the day their results came out because of the higher credit cost. Now what this correction has actually done is it has brought the PB ratio of this company onto the medium range in the last 5 years if you see, and that has made it a fairly valued bank in my view right now. Again, I'm not saying that you go and buy this stock, but I'm just giving you some data backed analysis here. The median PV you will see is 2.3, and right now if you see, it is trading at 2.3. Because of this correction that has happened in the month of July, the stock's PB has come down from 3 to almost 2.3, which is a very, very good parameter to look at. Now, if I compare the top 4 private banks in terms of the PE ratio and the PB ratio, very quickly you will notice that Axis Bank has the lowest PE right now at 13.53. And from a PB ratio perspective also, Axis Bank has the lowest PB at 2.30. Rahul, are there any other risks that we need to be aware? See, the risk is if you go to the shareholding pattern, very, very quickly you will notice that 53% of the company's stake is owned by FIIs. And right now, I do not know whether FIs have stopped selling the banking stocks. There may be continuous selling in the next few weeks. So I cannot predict it. Nobody can predict it. And this is the risk that people take when you're investing in stocks, right? But if you say that, Rahul, I do not want this risk of FIs selling again in the next 4 to 6 weeks, then what should I do? You should look at some banks that are not dominated by FIs. And for that, PSU banks are a good space to look at. For example, I talked about Bank of Baroda stock, which is the second largest PSU bank in this particular video. Go and watch that video. You are going to learn a lot about Bank of Baroda analysis. But in this video, I want to pick up the number 1 PSU bank, which is the SBI Bank. And let me speak about SBI Bank as well. So far, if you're liking this video, hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with such content for you at zero cost. With that, let's have a look at State Bank of India. So first of all, shareholding pattern, if you see, FI's perspective, only 11% stake is by FIs in State Bank of India. So investors who are worried about FI's continuous selling, then the PSU banks might be a better space for you, right? Now coming back to State Bank of India's technical chart, very quickly have a look at my screen and you will see a uptrend channel is being formed from almost March 2024 onwards. What does this channel means? It simply means that the stock has been making higher highs and higher lows. What do I mean by higher highs? So if you see, for example, here the stock made a high, then the next high it made was a higher than the previous high. Then the next high that stock made was at around 912 level in the month of June. That was higher than the previous high. If you look at the next high that the stock made was at around 899, which is slightly lower than the previous intraday high. But overall, if you see, it's a uptrend channel. It has been making lower lows. So when the stock falls, it falls, but it doesn't go back to the previous low level, right? right? So for example, here it fell to this level, but the next fall that happened somewhere here, which is higher than this, right? So that means the stock has been making higher highs and higher lows. So it is showing us the uptrend channel. But more importantly, recently the stock has broken this uptrend channel as the stock has come down, has fallen out of this uptrend channel. And when you see here, this drop has happened here somewhere around in the month of August. It has taken a nice support at 796 level, right? The key question for us is that can this stock now go back and join this uptrend channel? Whether that is likely or not, I cannot guarantee it. I cannot tell you, but I can do some analysis in terms of the looking at the fundamentals of the company, because if the fundamentals are strong, then invariably in the either shorter term or the medium term, the stock is likely to do better. So for that, let me now dip into the stock's fundamentals. So here are 3 to 4 hypercritical points about State Bank of India. Point number 1, you see my screen, is that their loan growth here is around 14.41%, which is pretty much at industry level. If you go and check HDFC's result, even we saw Axis Bank in this same video, around 14 to 15% is the loan growth that we have seen across the banks. So that's looking pretty good in my view. If you look at the GNPAs, because when you talk about PSU banks, one of the very important factor that we need to look at is the GNPAs or the bad debt, because history tells us that PSU banks are very naughty and notorious in terms of giving loans to where government wants them to do, right? So NPAs are very important for us to look at when it comes to PSU banks. And if you look at the NPAs here, they are pretty much coming down and they are pretty much contained right now. I don't see any issues from an NPAs perspective right now for SBI. What about NIMs, Rahul? So if you look at the NIMs here, pretty much stable between 3.47% to 3.35%. I don't see any major issues here right now. In terms of the cost of deposits, which is where the banks are struggling right now, it is high, right? It is at 5%. This is an industry-wide problem that we've spoken about already, right? And if I just talk about the deposit growth here, if you look at the deposit growth, this is where the State Bank of India is struggling. Many other banks are struggling as well. If you look at their total deposits, they have only grown by 8%, right? While the loan growth has been around what? If I go back here, it is around 14%. So there is a big gap between the deposit growth versus the loan growth. This is the problem right now SBI is facing, and I'm being very, very honest with you on that particular point. If I speak about operating expenses, very quickly you will notice that their cost to income ratio has come down. So if they were spending 61 rupees to earn 100 rupees, that has come down to 49 rupees. And a Sarkari bank becoming leaner is a very, very good sign in my view. Also, if you look at the overheads to operating income, important ratio from a cost perspective, it used to be at around 25%. If you look at this purple box, it has come down to 19%. So overall, I can say that SBI is becoming more and more leaner. That is a very, very good sign in my view. If I talk about the ROE percentage, they are all in uptrend right now. Albeit that ROA percentage, I would like it to be at around 1.5% for a bank like SBI, but nevertheless, it is still growing, which is a good news. Now, last 2 points in terms of valuation, State Bank of India, if you see the PE is above industry PE and the PB is also above the industry PB, mainly because of the massive scale, number 1 PSU bank, and the scale is just huge, right? So it does demand some kind of premium in terms of the valuation. I don't think it is highly overvalued for the scale that it offers. So that's on the valuation. But now coming to the very last hypercritical point, that there is a news in the market that SBI is likely to sell its stake in the Yes Bank. Just to put this very big disclaimer, SBI has denied this, right? They are not confirming this. This is a rumor in the market right now. I do not know how true this news is, but if this was true, then what is likely to happen is that when they sell this stake, they are going to earn a profit of around 100 billion rupees. And if you convert this into crores, it is going to be around 1 lakh crore. This is just an estimate. This is not a number. And anyways, this news is not confirmed. But when this news comes out and when this news becomes confirmed, in my view, that is going to really help SBI in terms of profitabilities, because 1 lakh crores of profit is not a small profit in my view. And at that time, bank stock might see some positive uptrend. Again, not a stock recommendation from my perspective. I am sharing you very clearly with disclaimers the information that is available out in the public domain. It is up to you to make your own investing decisions. And if you want to learn about investments, you can consider joining my YouTube member community. I do not have any paid courses right now. I only teach practically by posting on a daily basis on my YouTube member community, and the feedback has been good. Try it for 1 month and you are going to learn a lot. With that, I'll see you in my next video. Until then, keep rocking.